Happy New Year, everyone. Welcome back to the first weekly technical insights in 2024. Our Singapore stock market ended the last trading day of 2023 last Friday on a positive note. The STI index was up 0.8% or 25 points to close at 3,240 points, the best performer among the Asia indices. But this can't be said for the rest of the Asian markets. Japan Nikkei 225 index was down 0.22%. While Shanghai Composite Index rose up 0.68%. Hong Kong Hang Seng Index only inched up 0.02%. On the US side, all three major indices ended their last trading day in the red. The Dow Jones Index lost 0.05%. Broad-based S&P 500 fell 0.28%, and tech-heavy Nasdaq Composite sank 0.56%. For the last week of 2023, all three major US indices still managed to end the final week in the green. The Dow Jones Index jumped 0.81%. It rose for 9 straight weeks to end the year at 37,689 points, its best winning streak since 2019. Broad-based S&P 500 index was also up 3.2% for the week to settle at 4,769 points, with a surprising gain of 24% for the whole of last year as US inflation slowed and the economy remained strong. Tech-heavy Nasdaq Composite Index picked up just 0.12% for the week to close above the 15,000 handle at 15,011 points. The momentum continues to remain favorable heading into the new year. In Asia, the Hong Kong Hang Seng Index rose 4.33% in the last week to close at 17,047 points, keeping the benchmark index at the highest level for the past 4 weeks. The Hang Seng Tech Index advanced 6.09% to end the year at 3,764 points. For the year, 82 members Hang Seng Index fell 13.8%, the worst among the major indices worldwide. The CD broader stock market also lost US $523 billion of market value in the process, according to Bloomberg data. The top 3 losers for the year includes Li-Ning, Country Garden, Zhongsheng Group, which slumped between 53 to 69%. The struggles between the Chinese developers and local governments, along with investability and geopolitical concerns, are likely to overwhelm any cyclical gain next year. This week's gain on the Hang Seng Tech Index remains the best since end of July, driven by a recovery of video gaming operators like Tencent and NetEase. The duo had lost a combined US $63 billion in a sell-off 2 weeks ago after Beijing proposed curb on excess in-game spending. Our STI index ended the final week of 2023 up 3.18%, a very strong performance to end the year at 3,240 points. This is the 4th consecutive week of gain for our benchmark index. Breaking down the strong performance in the STI index, they were helped by gains in our 3 local banks. DBS Group was the biggest winner last week among the 3 banks, jumping 4.41% for the week to close at $33.41. UOB also gained 3.08% to end at $28.45, while OCBC advanced 2.69% to end the year at $13 flat. SGX Group was also up 2.61% for the week to close the year at $9.83. The biggest winner for the final week of last year was DFI Group, up 12.15% for the whole week to $2.40, helped by the strength in US dollars. CapitaLand Invest also performed very well, rising 6.04% in the last week of the year as the recovery in S-REIT continues with the prospect of lower interest rate next year. So for this week's technical analysis, let's look at both DFI Group and CapitaLand Invest. First, let's look at DFI Retail Group. The retail giant had a positive week in the final week of 2023, up 12.15% to US $2.40. The 12-month high of DFI Retail Group was seen somewhere on the 6th of February at $3.33, and the 12-month low was seen at the end of October at $2.11. Since the 12-month low in October, the stock seems to be trading in a range-bound direction for the past 2 months or the final 2 months of 2023. The stock price is now testing the blue color line that you see here, which is the 100 days moving average at $2.40 as well. The 100 days moving average in blue is often viewed as a pivot level. If a stock closed above the 100 days moving average, it is likely to have a change in trend upwards, and the 100 days moving average will become a support level going forward. However, if the stock were to close below the 100 days moving average, then the stock may start to trend downwards and the 100-day moving average will then become a resistance level. The MACD indicator is currently showing positive momentum in the prices as the MACD line crossed above the signal line last week. If both lines were to break above the zero baseline, the uptrend momentum may strengthen further in the near term. The RSI indicator also crossed above the 50-point neutral mark last week, signaling the start of the uptrend that we are currently observing. The latest reading on Friday was 61 points, which is in the healthy range and show that the uptrend momentum is still very strong. We also note that it is still some distance away from the 70-point overbought mark, indicating that there's still more upside to come for DFI retail group. With both indicators confirming that the uptrend is likely to continue, the first resistance target that we are looking at will be the high on 16th of November over here at the price of $2.44. Breaking above this level, the price may test the red color line that you see here, which is the long-term 200 days moving average at $2.61. For entry and support level, traders may use the 20 days moving average or the 50 days moving average in the white and yellow line that you see here at $2.26 to target the resistance level of the 200 days moving average. Next, let's look at CapitaLand Invest. The real estate investment trust or REIT had a positive week last week, rising 6.04% to close the year at $3.16. The REIT 12-month high was seen on 30th of January at $3.92. The 12-month low was seen somewhere at the end of October at $2.83. Since the 12-month high that we see in January, the stock price has been in a primary downtrend. Since September 2023, the stock seems to be trading in a range-bound direction in the last 4 months of 2023. The stock price is now above the blue color line, which is the 100 days moving average at $3.07. And last Friday closing of $3.16 is convincingly above the 100 days moving average. With the 100 days moving average seen as a key pivot level, a close above this 100 days moving average signal to us that it may have negated the downtrend that we have seen for the whole of 2023, and in 2024, it may have a change in direction and the 100 days moving average may become a support level going forward for the CapitaLand Invest unit price. The MACD indicator is currently showing positive momentum in the prices as well as the MACD line crossed above the signal line last week. The MACD line breached above the zero baseline last Friday, so the uptrend momentum may strengthen further in the near term. The RSI indicator also crossed above the 50-point neutral mark last week, signaling the start of the uptrend that we currently observe. The latest reading that we have on the RSI was 62, which is in a healthy range and show that the uptrend momentum is still intact and still strong and healthy. We also have some distance away from the 70-point overbought mark, indicating that there's still more upside to come. With both indicators confirming that the uptrend is likely to continue, the first resistance target that we are looking at will be the high in September that you'll see here at around the $3.24 level. And just slightly above that, you also have the red color line that you see here, which is the 200 days moving average at $3.27. So do expect heavy resistance when we approach these two levels. For entry and support level, the same thing, the 20 days and the 50 days moving average in white and yellow at the price level of $3.03 and $3.07 could provide support and entry for traders to target the 200 days moving average at $3.27. So this is all I have for the first video of 2024, and I hope to see you every week on our weekly market review show, and I'll see you next week in the next technical insight.